Hello class and welcome. In this video we will continue with the recording of transactions into the petty cash book. Pause the video whenever needed. For today's lesson you will need your textbook and printed worksheets of the petty cash book. Topic quiz. Take a minute to answer the following on a separate paper or page in the back of your exercise book. Question 1. Define the following. A. Cash. B. Petty cash. C. Cash float. Question 2. Identify the source document of small cash payments recorded in the petty cash book. Pause the video now. Topic quiz answers. Question 1. You had to define first cash. Cash is all the money, notes and coins which the business has on its premises. Petty cash, the amount of cash kept in a business to do small cash payments. And cash float is the money in the cash register with which the cashier starts every day to be able to give change to customers. And number 2, the source documents used for small cash payments recorded in the petty cash book is the petty cash voucher. We will now mark the homework. Question A. Explain what is meant by the imprest system. The imprest system means that the opening balance for petty cash is the same every month. B. You had to calculate the amount needed to restore the imprest amount at the end of the month. For that you had to first calculate the total small cash payments, which were equal to $280 Namibian. If you calculate the balance of your petty cash, that was $350 Namibian that was available, the imprest amount, minus the total spent, you will have a balance of $70 Namibian. To calculate the amount needed to restore the imprest amount, 350 minus 70, it gives you $280 Namibian, the total that was spent. So remember, the amount spent is the amount needed to restore the imprest amount again. We will now look at how to record transactions into the petty cash book. Recording to the petty cash book. First look, you need to understand the layout of the petty cash book. There is a debit side and a credit side, just like in the cash book and any other ledger account. You record receipts in the receipts column on the debit side, and the small cash payments made from petty cash you record in the totals column on the credit side. The volume, day and details columns are shared between the debit side and the credit side. The analysis columns in the petty cash book. These are columns for items or accounts that appears regularly and can be more depending on the business. The sundry accounts. This is a section in the petty cash book for accounts that do not reflect in the analysis columns because they are not frequently used. There is a new account you need to know that is normally recorded into the petty cash book, that is sundry expenses. This is a ledger account for expenses that don't have the specific account in the general ledger. Examples of these expenses are the following: milk and sugar, coffee and tea, toilet paper, flowers, and so forth. We will now look at an example on page 71 of your textbook. On the debit side, you will see one single entry, the imprest amount received at the beginning of the month by cash from the cash book. Note, the volume must therefore also be CB and not brought down. For the payments, the details can be a description of what was paid by petty cash. Remember the petty cash voucher number. Then you complete the total that was paid from petty cash. This is the credit entry, where the money came from. And then you complete what was paid in the analysis columns or the sundry accounts section. This will later be the debit entries when we post from the petty cash book, meaning where the money went. Note the following. The 14th is not staff welfare but sundry expenses as explained previously. Exercise 4.1, page 72, number 1. Don't do day 31 yet. Analysis columns for this exercise is postage, stationery and wages. Ignore the transaction on the 17th and the second one on the 21st. Good luck and stay safe.